Do you really need more than $1 million to retire in comfort? Where did the stock market crashes of 2001 and 2008 leave you? The new reality that faces many Americans is that despite having saved for 20 or 30 years and placing those hard-earned dollars in the hands of a trusted mutual fund advisor, they have seen a massive erosion of their capital. Many of us are now faced with the stark reality of having to work well into our 70s in order to rebuild our lost wealth. Unfortunately, we have all been brainwashed into thinking that we need to amass a huge nest egg in order to live comfortably during our retirement years. This is based on the assumption that we move our investment capital into more conservative investment vehicles such as bonds, treasury notes, or certificates of deposit as we approach retirement. With these so-called safer, risk-free investments, we can count on a whopping 2 to 4% annual return. It's no wonder that many financial advisors want you to have over $1 million in tangible assets. If you're only getting a conservative return of 3%, this equates to a retirement income of $30,000 per year. There has to be a better way. So how do you take back control over your wealth creation? The simple answer is to learn how to invest for cash flow. Cash flow? You may be asking yourself, now that would require a whole shift in how I've been programmed to think and act. I know that it took me a while to fully grasp the possibility of a simpler approach to dealing with my challenge of having enough retirement capital. Here are the steps that I followed and that I encourage you to follow to shift the odds in your favor. The first step is to select the wealth creation sector, whether it be stocks, real estate, or systematized businesses that you would like to invest in as an active investor. Step 2, learn how to invest for cash flow in that particular wealth creation sector. For example, if you are fascinated with the wonderful world of stock investing, as I am, then start learning how to invest in best-of-breed businesses, as well as how to use simple option strategies to create consistent double-digit returns whether the market is going up or down. Step 3, take back control of your investment portfolio by firing your mutual fund advisor and opening up a self-directed investment account. Once you have increased your financial IQ from Step 2, you won't want to settle for the mediocre returns that most mutual funds provide. Being an actively engaged and educated investor, you have now built up your level of confidence in becoming a successful investor. Step 4, realize that the concept of retirement has changed dramatically over the past 10 years. By becoming an active investor, you can continue to build your wealth well into your 70s. As long as you can think clearly, you can profit from being actively involved in generating cash flow from your investments. And Step 5, work towards the goal of phasing out of your current employment while at the same time being more effective in generating the necessary cash flow to support your desired retirement lifestyle. Here's a simple comparison to illustrate the power behind cash flowing investments. In order to realize an income of $30,000 per year with a 15% return on your capital, you would only need a nest egg of $200,000, not $1 million. That's a huge difference and doable for you to realize. It's a far cry from what many in the financial services industry have been saying that you need. The key to your success is taking the first step in becoming better educated as to how you can tap into cash flowing investments, whether it be in the stock market, rental real estate, or setting up a systematized business. To learn more about how you can become a better investor, click on the link below. Here's to your ongoing success as a cash flow investor.